Good morning, 7:01 a.m. Pacific Standard Time. We have Amazon, and the markets have been extremely oversold, meaning that the bear has dominated this market, and this is what we call the first 30-minute rally off the bottom, is what people like to call it. Our market maker system, we can clearly see where those diamonds were and how they broke out higher and how strong that these markets are on the opening bell, and Amazon looks exactly how to trade the opening bell with an oversold market 2016, and we have 31 minutes on that opening bell. How to trade that opening bell, how to get that parabolic move in HFT. You can see where all of our bots are in our market maker platform that we own. See them? And so we're going to hit and we're going to have reversals. This is how volatility works when you're putting in a low in the overall broader market. On this opening bell, we're taking a look at the BIIB, a biotech. And basically, once again, the whole learning curve here is how to make a market when markets are oversold and you're going to go up. And the diamonds in our platform, look at the diamonds. They're all bid popping. So this is BIIB, and you can see exactly where that left elbow and how it's going to make a high and get a reversal. This is Tesla, 3-minute chart, opening bell, how to trade the volatility. Um, U.S. markets have been oversold, and basically, when you see the diamonds going higher, ascending in value, that is where we trade this left elbow. And now in the volatility, we can clearly see on Tesla and Netflix and Tesla both. This is Tesla and Netflix, which I'm going to show. It's running right over here, Netflix is. And so the amount of highs and then the first round of reversal, how to trade that parabolic move on the opening bell, how to trade and make money on the opening bell with the options. The options are going to be coming next. REGN right now had a super big left elbow gap down, and they came game busters off of that earnings release that they're going to be having. And not only that, we are clearly about the tape. 5 minutes. It will be 1 hour of the tape, and we're showing that left elbow gap down in the equity side, and then we know what the call and put side in our options. Our turbo options are going to go ripping higher from oversold condition. On the opening bell, we can clearly see once again how the market maker, turbo option market maker platform works. And when these diamonds are going this way, the call side of the market's going straight up. And now we're having a reversal. Markets have been terribly oversold for the bull. The actual opening bell volatility right now is the indexes were up. And now they've gone back to negative, where my pointer is here in the video. And basically what I am seeing as far as the fear indicators go is that the fear indicators did not quite meet our market maker verification model. Is that how bottoms get put in from oversold conditions and how the volatility and price action gets enormous, then something good is going to happen. Once again, Tesla, 7:33 a.m. We have exactly 1 hour and 3 minutes into this tape, 2/9 of 2016. This is how to trade that opening bell, and those are the type of moves that our market makers do in the Turbo Option Exchange. TurboOptionExchange.com is one that actually gives out your price prints when you're in the room. And we'll be talking a lot about this subject as we go. We are now open to our new MMTs, market makers in the option pit. Let's take a look. Amazon, $23, and the day is we're only open 1 hour and 5 minutes. We went straight up of that 475, and we went straight up to 498. That was a $23.19 what? Penny range. And what? In our market maker application. And the thing about it is that it makes the market between the public. We have our own exchange prints. We've got all kinds of things that people can actually do. And one of them is to understand that left elbow. And I'm going to pop the diamonds right now. Here they come. So that is that top end resistance reversal. However, markets start to put in a bottom when we get extreme volatility, and we did. The whole market was gapping down. They brought it all the way up, and then they sold into it right now using Amazon as that primary indicator. Is there's that left elbow once again, and making a market is making a market, and that was the upside, and this was a reversal side. And I will also show everyone in here that the range is 23.19. We came $11 off of the low, 11.92. Intraday trend ratio high in our format is 10.82. The high 498.38, open 478, dropped to 475, and ran it north to 498.38. Ladies and gentlemen, here I'm bringing up WYNN Resorts. The reason why I'm doing that once again, today is 2/9 of 2016. We had the left elbow gap down in the futures. They ran every name straight up parabolic and a high frequency algorithmic moves in price. And our market maker application is not wrong. And trading that volatility opening bell today was just how a short-term bottom that markets get at their lows and short-term volatility. And just remember, it's short-term volatility. And here it is right here. So WYNN, left elbow and a straight sell down. Today's date 2/9. And this is a special segment on how to trade oversold markets and establish call inputs and ETFs and many other things in these markets, with these markets that you will interact with. Reversal, volatility on the opening bell. 7:40 a.m. Pacific Standard Time. Price action. They all went straight up, and they had that big reversal. And we're going to be covering more. Big price line, PCLN, left elbow gap down. Today's date is 2/9/2016. The time is 7:42 a.m. Pacific Standard Time. And what we're doing with the MMTs is how to make a market in options. And trading options on price line makes a lot of money. This is a left elbow gap down. When they gap that down like they did, this is the MMT market maker application. Those diamonds are bots, meaning that we control high frequency technologies in the market by using our system. Within that left elbow gap down, and we went parabolically straight up. The markets are oversold, as we know, and the whole thing of it is the Dow is now down again 89 points. On the opening bell, they had ran that Dow into positive territory, and this is how the bull and the bear get together, and this is the reversal right here in price line. But trading the call options were at their lows right here on that opening bell. So they sold all the premium out of the weekly call contracts and the monthly option contracts. That particular price beta you need to sign up for so that you can learn option pricing tools that we have here. That's why they call us turbooptiontrading.com. And what you see here is the turbo option exchange and these price prints and how to get the entries on call and put options, understanding the imbalances of volatility, and there are a whole lot more. But markets start on the opening bell like this. And right now, we are exactly 7:45 a.m. Pacific Standard Time, and this is the results on big price line right here. That's a left elbow to knife hook in an oversold market, and how to trade it, how to profit in it, and why you need to be here full time. On this opening bell from a very oversold market in 2016, this is a left elbow gap down on the Dow, 15.8 in our system. Those diamonds were ascending in value, ascending plus. That is a high frequency algorithm at the top. This is where we went down yesterday on the Dow, and you can clearly see that test in the market maker brain as far as the index goes on the Dow 3-minute opening bell. It is now 7:48 a.m. Pacific Standard Time. We threw this one in here because we want you to see the amount of volatility and the bears were getting squeezed. The short sellers had to buy to cover, and they have. And now we're going to measure the price action. And what does that mean? Now that they have pulled back, is to go in and short some stocks that are still on their highs. Everything looks the same. Everything that I'm showing looks the same. There is the Dow Jones on this opening bell. Learn how to what? Learn how to trade markets. So, for the next segment, we're going to do the introductory to the weekly calls. And why do weekly calls have the ranges that they do have? And why is it that people that try to trade them who don't know what they're doing, they really get screwed on their entries? So we're here to make that possible.